Hello, everyone. Welcome to our very first episode. We've called it Bima Beamer, where we will be discussing matters insurance in general. But today's episode, we're going to discuss medical insurance. So we're going to bring to the show guests who are going to discuss matters insurance from every corner of the world. And today's guests, we have a team from Minet Kenya. And today's topic is a topic that affects everybody. Somebody said that you're just one medical bill away from poverty. And people have been encouraged to take medical insurance. So today's guests are going to demystify for us what medical insurance is, what the benefits are, and what we are supposed to expect, even with the new dispensation that is coming. And we hope that this podcast going forward is going to enlighten us as Kenyans and generally as people of the world on matters medical insurance and what is important and what you need to know when you're purchasing medical insurance. So we have two guests today from Minet Kenya. Both of them are called Edwin. So I'll have to really organize how I'm going to call each of them. We have Edwin Macharia, who is the general manager in charge of healthcare business in Minet. And then we have Edwin Kegode, who is the general manager in charge of managed medical care. So they'll both introduce themselves, tell us what they actually do and the difference between healthcare and managed medical care, so that we know, because both of them manage medical insurance, but for the different groups. So thank you so much. And it's really a pleasure to host this first podcast. So over to you, Edwin Macharia. Maybe you tell us. I know I've introduced your name, but you can still repeat it.
Yes.
And then tell us what healthcare actually does.
Thank you, Nekesa, and really glad to be here. Thanks for hosting us. So, as Nekesa said, my name is Edwin Macharia, General Manager in charge of the Healthcare Department at Minet, where we focus on corporate medical insurance and also retail medical insurance.
And our second guest, Edwin Kegode.
Yes, Edwin Kegode. Yeah, good morning. And I'm glad to be on this show, being the inaugural podcast. At Minet, I do take care of a department, division called Managed Medical Care Division, which is a division that focuses on providing healthcare solutions to large employer groups with a focus on public sector schemes, where we have a mix of healthcare financing solutions to be able to bring forth an optimal healthcare cover for our members. So we pride ourselves as being the pioneers of managing the teachers' medical scheme, as well as part of the joint venture that is handling the National Police scheme. Thank you.
Thank you. And it's so cold in Nairobi today. I forgot to introduce myself. My name is Carolyne Nekesa, and I'll be the host for this podcast. So let's dive in. We are discussing medical insurance today, and you've said you handle corporate covers, retail covers, and I believe also international medical cover. And you handle organized groups or large schemes in this case. So first question, or rather our first discussion is, why is medical insurance really important? And we are speaking about it in this era of what we are seeing happening now. The needs of the people, cost of living has gone up a bit, and medical insurance is not cheap. People have to go into their pocket and actually buy. But why is it important? Why should somebody consider? And maybe let me start with Macharia.
Yeah, thank you. That's a really good question. So, for one, medical insurance is not a good to have. It's essential that every person has a level of medical insurance, regardless of the level, because, like you started by saying, we've seen people wipe out their life savings, or when a medical emergency comes up, whether it's an admission due to an ailment, or could be an accident, or could be a surgery. And, what medical insurance helps you do is get the care you need without needing to worry about the cost. So it is very important, and it acts as a safety net in the case where you have an unexpected medical issue.
Now, you've said without worrying about the cost, but there's a cost to it because the insurance itself doesn't come cheap. So when you compare the cost of actually purchasing medical insurance vis-a-vis the cover that somebody ultimately gets once they've purchased medical insurance, how would you actually convince somebody who probably is thinking about their share of wallet on why they should invest into that?
Yeah, that's a really good question. So how it works? So you pay a premium, and in turn you get a medical cover. And what that means is that in the case when you have a medical expense, then the insurance company will pay the claims. Okay, so it helps to cover you in case of an uncertainty, or because we do not plan to get ill. Some of these things just happen. So in terms of, does it make sense to get a cover or wait until you have an ailment, then you pay from pocket? Of course, we know that some of the medical costs can be actually very expensive. So you'll find that you have a medical cover, or say an inpatient cover of $500,000, but you're paying a fraction of that in premiums. So it does make sense to consider taking medical insurance. Yes.
Okay, I'll come back to you later regarding maybe is there a formula around how much premium do I pay to get this amount of cover? But before we discuss that, maybe for you, Kegode, for large schemes, I know you mentioned there's teachers' medical insurance, and then we have national police, which are really, really large schemes. And sometimes I know companies and organizations have shied off getting their staff medical cover because maybe there are so many, and someone is thinking this is going to be very expensive for us. So how or what plans have been put in place to ensure that large schemes also enjoy the benefit of cover without it being very costly to the employer?
Okay. Yeah, thank you. Thank you, Nekesa, for that question. And just in the backdrop of what my colleague here has talked about, medical cover, medical insurance involves pulling together of resources to be able to create a pool from which then medical bills can be paid from. And I would like to mention that for large employer groups, the tendency in the past has been to provide the employees with an allowance that enables them to secure medical services when they need the services. But you and I know that once money gets into your pocket or into your phone, for those who are getting money on their phones or in the bank account, then there are all these competing needs that come through that need you to then be able to prioritize those other needs. And since medical care is not predictable, it may come at a time when you do not have the funds in your account, in your wallet, or in your pocket to be able to defray those costs. And so just setting aside that an amount of money that can be put into a fund, a pooled fund, so that you can guarantee that should there be need to get medical services, then that fund can be able to respond to you. That's what some of these employer groups have done, where instead of continuing to avail an allowance, is pulling those resources into one pool and therefore allowing members to draw from that pool when need arises, and to very good extents that allows a member, for example, to go through a procedure without having to pay anything out of pocket. And that's what gives the peace of mind, and that's what we call insurance. So insurance is a formal way of just ensuring that these funds are put together, like my colleague has said, premiums, paid to an insurance company, and that insurance company in turn guarantees you a certain level of coverage. For us in managed medical care, we pull those resources together and we look out to the different financing models that are available and seek to optimize coverage for our members, and therefore giving them that guarantee to get medical services when they need it.
Now, considering that large groups may actually require a lot of money in terms of premium paid to insurance companies, how do you cushion the employer here? Because I don't think anybody has an unlimited amount of money to put into a fund to cover a group. Let's maybe just discuss the numbers that we are talking about here. For example, the teachers' medical scheme. What numbers are we looking at?
I would say that we have upwards of 360,000 families within that scheme, which potentially gives us a population of over 1.2 million belly buttons. These are members of the scheme that would need medical services from time to time. These different families would require medical services spanning from outpatient or inpatient coverage, sometimes dental services, optical services, and therefore the resources that we utilize to pay off these claims are drawn from what was previously allowances that were paid out in the pay slip. And over time, the government has also subsidized that by contributing more into that fund that enables members now access services from limits of about $1 million per family per annum to larger amounts of 2 million and beyond. And within the scheme, there's also the opportunity to take care of medical bills when services are not locally available. We evacuate members out of the country. And so you see that if this allowance or this benefit was in your pocket, you possibly would not be able to easily afford these services. So pulling those resources together, which is now what we call insurance, guarantees you that when you put that money aside, then you can get access to the benefits of being a member of that particular scheme.
Okay. Yeah. So Minet is a broker. You're not an insurance company. We are not an insurance company. We are a brokerage firm. So it means our job is almost like intermediating between the client and the insurance company. So when it comes to choice of insurance company as a broker, intermediating between your client and the insurance company, what are some of the things, Edwin, Macharia, would you consider, would you want a client to consider before settling for the proper insurance company?
Yeah, so when it comes to medical insurance, there are, of course, many permutations that we can work around. Of course, the basic cover would be the inpatient cover, but we also have outpatient cover, dental, optical, maternity, but the primary cover being the inpatient cover. So for inpatient, it would take care of cases of admissions. So if you're admitted into a facility, then your bills would be paid from the inpatient limit. Or for outpatient is your day-to-day visits or on outpatient basis, consultation, drugs, if there are dressings to be done, and those kind of things. Dental, of course, taking care of the teeth, and optical for the eyes. Maternity would be able to take care of prenatal expenses or the actual delivery, and in some instances also the postnatal care after delivery. So when it comes to designing a medical cover, which fits into what your organization is looking for. So we look at a couple of things. The first one would be what kind of limits, benefits and limits are you looking at? So if it is inpatient, do you want a cover of 500,000, 1 million, up to 10 million? If it is outpatient, what kind of limits do you want? Then we also look at the population, because remember the premium is arrived at based on the number of lives you have on cover and the benefits and the limits that you have selected. So the higher the population, or you find that the unit rate also comes down. So for corporate schemes, we are able to tailor make in whichever way that the client feels addresses their needs. Okay, so if you do not want maternity, if you do not want to cover dependents, or if you want to cover everybody, or to whatever limits, if you want to have categories of different limits for different groups of staff, then we are able to do that. For individual covers, on the other hand, we mainly find packages which are already predetermined, but we are also able to negotiate. The key difference between when you are selecting an individual cover vis-a-vis a corporate cover would be the medical history. For individual covers, you would be required to share some medical history, which will form the basis of computing the premium that will be applicable. And for corporate organizations where the numbers are big, like my colleague mentioned about the size of the pool, then we disregard the medical history and you are able to get a cover without needing to go for medical checkups.
So does disregarding medical history contribute to claims? To a shift in claims? Because I mean, if I'm an individual, you've gathered my medical history through a medical examination, so you know what you're bringing on board.
Yes.
For large schemes and large groups, you're not getting this information. So what are the chances that you're even pulling in people with complicated illnesses, and therefore you're going to have a situation where claims are going to be very high because that part was not taken in?
Yeah, so we work with the principle of probabilities. So if it is Nekesa who has taken a cover as Nekesa, or then what are the chances of Nekesa going to hospital within that year and claiming to their full limit? So that is high, of course, as compared to an organization. If you have an organization with 100 people, or chances are not all will utilize the cover, but there's a probability a certain percentage of them will be using that medical cover. So that's why we are able to, or the underwriters are able to disregard medical history for big groups, but for individuals, it becomes necessary, so that the underwriter is not buying a risk that is already there. Maybe Nekesa knows that next week I need to have a surgery or there's an admission. So you get a cover, so those checks are important. And the other thing that you'll find is there would be things like waiting periods. So for individual covers, you pick a cover today, but you have waiting periods if it's for a chronic illness, or say 6 months or 1 year. If it is for maternity, or there's a 10-month waiting period or something of the sort, so that members are not buying cover in order to utilize.
But what's the point then of buying cover if I'm not buying cover to use?
Yeah, so I mean, when you buy a cover, especially for medical, you do not intend, or you do not want to use it. Nobody wants to get admitted or get sick. Yeah.
Okay.
But we also have to look at the moral hazard. I personally get many calls from friends. I want to take a medical cover for my family and I want it to include maternity. The first question I ask them,
how far along
are you expecting? Yeah. So, and in that case, it wouldn't be, maternity wouldn't be covered.
Yeah.
So it's mainly just to control that moral hazard. But at the end of the day, medical cover is really, really critical. And what we do is to help you navigate. You asked a question about arriving at the rates.
Yes.
So I've talked about the population. The bigger the size, the lower the unit rate, and then also the benefits and the limits you choose. So if you choose an inpatient cover of, say, 500,000, it would be cheaper than a 10 million inpatient cover.
Okay.
Or the other thing that we also look at are the choice of service providers. Which kind of facilities do you want to, or do you want to access? So for the very high-end facilities, then we are able to you pay a bit more than someone who is okay with just going to the local facilities within their area, which are not very high cost.
Okay.
Yes.
Kegode, do you have something to say about that, especially in the context of very large schemes of 1 million, the way you have just pointed out?
I think maybe allow me to say that it's a chicken and egg story here, because at the onset, for you to be able to make certain determination, you need data. But in the case that you have to set up a completely fresh scheme, then the data you rely upon is what my colleague has mentioned, to be able to use statistical information on probabilities of occurrence of certain conditions, looking at the occupation of the employer group, looking at other risk factors that you would need to be able to make a determination as to the premium, including aspects of the kind of panel or medical providers that members may access. But over time, we then use experiential modeling or experiential rating, where we have prior experience of the schemes that we administer that feeds into determining the next premium that the scheme should pay. And therefore, the need for medical checkups is eliminated when you're dealing with large groups. And so for any employer group that is out there, maybe just starting up, even so, we're able to use the general information that is available to rate the scheme. Book rates apply, and where there is more information, then they can get very competitive rates. And that's the work that Minet undertakes to do, is to be able to then moderate the rating for schemes and give the employer groups what is suitable within their budget, and also to be able to meet the client's expectations. So for the larger groups,
just sorry to interrupt you, but moderate here means negotiate for.
Yes.
Okay.
Having factored in the client needs, budget needs, and maybe coverage they require, and also from experience in managing similar schemes, then you're able to give a client a solution that will be able to fit within their budget, to be able to respond to the scope of cover that they require, and to scan the market and get the best solution for them. So that primarily occurs in our corporate business. For managed medical care division, where we already have large groups, then it is actuarially determined. We go through an actuarial process to determine what would be the most suitable cost for these schemes, and that becomes the starting point. By going through the years, then we use the experience of the scheme to make determination as to the extent of cover that we'll provide. If there are any enhancements to be done, then those are factored in. But the beauty about large schemes is that you spread the risk across a large population, and you're able to achieve much smaller cost. And not only do you achieve that cost by spreading the risk, but also the bargaining power that you get from the large population in terms of the potential utilization of the scheme then allows you to negotiate for better rates with the medical providers, which is passed on as a benefit to the scheme.
Okay.
Yeah.
Now, even as you're moderating and trying to get the best rates for clients, you know, when you're going to present to a client, and let's look at the country right now and where we are, there's already a lot more deductions that are happening in the payslip of the employee. And the employer is also expected to contribute part of that. So I'm assuming the employer has also gone deeper into their pocket to pay for some of these statutory deductions that are happening. The same employer is expected to provide medical insurance for the employees. So what are some of the negotiating items that you're going with to the table of maybe the underwriter here on behalf of the client here, who's highly likely going to be the employer, so that you try and balance the cost of how much this scheme is going to cost vis-a-vis what the employer can afford? Are there some benefits that we are seeing being scrapped off or reduced so that it can fit the budget of the employer but still give the employee some significant cover in this area? Maybe I'll start with you, Macharia, then Kegode, you can also say something about that.
Yeah, so when we do the negotiations, because of course we sit in between the insurance company and
the client.
Yeah. So the first thing we do is to understand what exactly are the client needs. Okay. We also look at the profile of their population, and we are also able to guide them on how to structure that or specific cover. Or then when we now get quotations from these insurance companies, we are able to compare what actually fits into the client budget and their needs. And whenever the premium is probably, say, higher than what the client was expecting, there are different ways that we are able to negotiate that down. Or we can work with things like having co-pays. A co-pay is basically some amount you pay upfront or when you're accessing care. So it could be 100 shillings, 200 shillings, or even 1,000 shillings. And we can graduate this. So if you go to a very high cost provider, then you pay a certain level of copay. But if you go to the low cost or more affordable providers, then there's no copay. So in that way, you find that, the population will be more directed into using the more affordable service providers. So that is one way. We do try to avoid limiting the cover. Although in an instance where the premium is way above, then there are other ways we can look at the benefits. For example, you can choose to reduce the inpatient limit a little bit. So if you are giving every family 5 million, you can choose to give it at 2.5 million. And then we introduce a cover we call group excess of loss cover, which is a blanket cover for the whole group. Or the limit can be high, up to 10 million or 20 million, but only accessed once a member has exhausted their primary limit of 2.5 million. So the group excess of loss cover has a much lower premium than the primary inpatient cover. So you find you're able to bring down the premium in that way.
Are these some of the things you tell employers when you're going to, say, either renew a cover or pitch for business, that yes, we can see you have this amount of money. It can only afford you up to this time, this level of benefits. And therefore, we are encouraging you to buy group excess of...
Definitely.
Yeah.
So before we go for a renewal meeting or for, to discuss with a prospect or the kind of cover they want, the kind of budget they have, we have to look at all those things. So we will also be checking on, like, how have you structured your covers? So for example, you'll find that a per person cover will be more expensive than a per family cover. So if you are giving a per person cover of, say, 2 million per person.
Per person, okay.
You can change that to 3 million per family.
So per person cover here means someone and their partner and the children.
And the children.
Each of them has 2 million
Each of them
cover.
getting 2 million.
So now family cover means if it's 2 million, it's shared amongst the five
within the
of
family.
you. Okay.
And you'll find even if you increase from that 2 million to, say, 3 million per family, it is still
within
cheaper.
Manageable. Yeah.
And most of the time, because we've looked at the data in terms of usage for the past couple of years when we've been managing that client, and we're able to advise them. So we will have different options and permutations of how these covers can be structured and which one makes more sense for our particular client. Yes.
Kegode, your comment on that. Now in your case, this person is very large, has a very large scheme. They don't have a lot of money, but you're still trying to negotiate something for this very large scheme. 350,000 is a whole community somewhere.
Yes.
And more. What are some of the things that you're going to be negotiating with the underwriters to ensure that that fund is still affordable, but like we are saying, still gives the clients here some good benefit when it comes to medical cover?
Yeah. Coming to the area with which we provide covers for large schemes, one of the critical factors there is really to look at cost and benefit of the scheme. On one end, the employer group would desire a comprehensive solution for its employees. And on the other end, there are limitations, budgetary limitations that might arise. And therefore, the reason why we go out and look for other models of healthcare financing which will yield discount on the total premium that is payable or the total cost that is payable for this particular employer group, in which case we blend in solutions such as having what my colleague has talked about here, excess of loss cover that overrides a primary cover. We have models such as capitation, which enables us to negotiate with medical service providers very favorable rates that then are passed on to the scheme as a benefit in terms of discounting the costs that would otherwise be paid if we went straight up for insurance cover. And through that, then we are able to achieve very competitive rates for the employer group, and as such are able to offer equally competitive solution, but in which case using a different healthcare financing model that will respond to such a group. Yeah.
Now, if you are speaking to Gen Zs, because they are our current hot topic about medical insurance, and somebody has not gone to hospital for the last 5 years, they are fit, they hike, they run, they eat healthy, so they don't anticipate getting sick. Beyond paying medical bills, is there really an advantage of having medical insurance?
I think let me take that one.
Yeah.
and say that the medical insurance cover does not just limit to illness, but it also extends to accidents. And accidents are inevitable. And it would be good that as and when you're able to secure a cover, that you procure a medical cover, just to give you peace of mind. The idea around a medical cover is to give you peace of mind that should anything occur, it could be illness or accident, then you are guaranteed to get a certain level of coverage. You're guaranteed that your insurer will be able to pay the bills in hospital to a large extent, and therefore not eating into your other provisions like your upkeep, your rent, and your pocket money in that case. So medical insurance does not just limit to health, but also extends to accidents. But just coming back to the other aspects of health insurance is that when you have a health insurance plan, it also avails to you other benefits that would include health checkups, which are essential in just monitoring your well-being, so that you can guarantee yourself that you can be productive, to be able to to be able to do that which you like to do most, and to also be able to possibly go to work, attend school. So just ensuring that your health vitals are put on check through a medical insurance cover. And as much as you may have paid premium and that premium is not to be utilized in that sense, what we have seen is that more and more medical insurers providing opportunities for members to go for health checkups. And that goes a long way to prevent
Know yourself.
catastrophes that could come later in life. Yeah. So I think that's an aspect, one of the aspects within health insurance that is beneficial, even if you don't have to be hospitalized. Yeah.
So why a broker and not going directly to an underwriter, Macharia? Why should I come to Minet
Yes.
and not go directly to an underwriter?
Oh, that's a really good question.
Yeah.
So for one, a broker like Minet is the advocate of the client. We have the technical expertise, having been in this field for many years. We know medical insurance. We know what clients are looking for. We are able to structure exactly what they are looking for. But the most important thing is that when do members interact with this medical cover is at the point of claim. And this is a place where you really need to see that you have a medical cover. So in the instance where there are challenges, maybe the ailment is an exclusion or it's borderline, so that's where we really come in to just make sure that we advocate for our clients to make sure that whatever it is has taken them to hospital is actually covered. The other very important bit is on the reviewing the policy documents, or just making sure that insurance can be very technical. Yeah, and when you sign that dotted line, most of the time you've not understood.
You just say, okay, sign.
You've not understood. Even when you
Yeah.
download an app or you have
You
a
check the
subscription,
box. Yeah.
just tick the box. I have read and understood and
the terms and
accepted.
condition and accepted.
So the broker is there to make sure that you actually, or they actually read and make sure that whatever you thought you're purchasing is what you've actually purchased. And in case there are any discrepancies, then we are able to engage with the insurer and make sure that everything is well covered. So the most important one is that we are the advocate of the client. Or the other issue is what you are talking about in terms of how do you structure your cover. And I like that Kegode mentioned the various models like capitation.
Yeah.
We've talked about insured. We are also able to do self-fund administration.
Sorry?
We are also able to do self-fund administration, which basically involves structuring your cover in a way that you don't need to pay a premium if you can actually fund those benefits yourself. So Minet, being an MIP, a medical insurance provider, is licensed to manage funds on behalf of clients, where you will still access your cover the same way you would if you are insured, but then we take care of the bills with the service providers. So those are some of the key benefits of using a broker. Yeah.
So there are terms that keep on coming up when the two of you are speaking, and you're speaking as experts, but imagining our listeners will be from diverse areas, and some terms need to be clarified. There's a term called capitation that I think needs a little bit of explaining what it is. But I also want another term that keeps on cropping up to be explained so that for the sake of the audience, for them to understand. So Kegode, I need you to explain to us what capitation is, and another one called pre-authorization, what it actually is. Yeah.
Maybe I would approach this from a simplistic perspective and say that capitation is getting into an agreement with a medical service provider that your members will be able to access a certain range of services at a given fee. That's the simplest way I can put it. So what happens with the managed medical care division is that we work with partners who are able to engage medical providers directly and negotiate particular capitation rates that will guarantee a range of services to members, and therefore reducing the layers that exist after a service provider has offered services, which means that other intermediaries could increase the costs. But if you go directly to the medical provider, you're able to get the costs at a much better rate and pass it on to members. So capitation is indeed just going out, meeting with a medical provider. It could be a hospital or a clinic or a medical center, and agreeing that the services offered under your roof can be procured at a given rate, and then guaranteeing that when your members visit that provider, they can be given that range of services at a given fee.
Okay.
Yeah. So that's capitation in simple manner. And I would want to draw parallels to capitation to what we see with education. Capitation is just a strange word where you find that the schools are given a certain rate that guarantees guarantees pupils to access education. So within that capitation, there's some range of services that they're able to get from school. But that, going back to our medical terms, pre-authorization is another one that you asked about. And pre-authorization is actually two words. Pre meaning prior, and authorization is granting a permission to proceed to offer certain service. There is need for pre-authorization in providing medical services from a perspective of allowing the payer to be involved in the process, such that the payer is able to determine that the services that are being offered to a member are within the scope of services that have been promised.
And the payer here is who?
The payer here could be a medical scheme administrator, could be an insurance company, or a medical insurance provider who is managing a scheme on behalf of an employer group. They will need the hospital to make contact with the payer and ensure that the services that are being offered are within the range of services that have been provided for, to determine whether there is a benefit balance available to the member, and also to give the payer an opportunity to negotiate the final payment that particular service is going to attract. So take an example. If an individual went into hospital for a procedure, a simple procedure like a tonsillectomy, then the hospital would communicate that to the payer. And in our case, with the schemes that we administer, this is done remotely. It is done in the background. It does not involve the member having to do the pre-authorization. It's actually a service that is done between the hospital administration and the payers administrators, where they communicate and state that a member has come through and we need to offer this service to them and at this rate. And so the payer is able to verify that that service is covered and that service should be paid within a certain range. And if the two agree, then an authorization is granted. If the two do not agree, then a negotiation kicks in. And that negotiation is to be able to secure the benefit of the member from exploitation so that you can guarantee that member longevity of their cover and to be available also for any other use by another member within the family.
What would make the pre-authorization, examples of when pre-authorization would not take place?
Primarily, what we seek to do as administrators is to negotiate beforehand with medical providers so that certain services are pre-agreed upon and tariffs are agreed upon, such that when members go to hospital, then the need for pre-authorization is no longer there. But for complex procedures where there are different components that feed into the cost of healthcare, then pre-authorization will be required just to ensure that we do not have a situation where a member goes into hospital and the benefit is exhausted while in hospital. We have an opportunity to negotiate beforehand so that the member can get the services that they require and within reasonable costs. Yeah.
Okay. Now, for you, Macharia, you mentioned something regarding exclusions.
Yes.
So what are some of these things that are excluded in medical insurance? So that you are telling me the story of a friend who comes and you want to confirm how far along the wife is before they take a maternity cover. So what are some of the things that are excluded in medical insurance?
Yeah. So, of course, like any policy of insurance, in medical, we also have exclusions. Some of the key ones would be things like cosmetic surgery, but this would be covered if it is related or to some treatment that you're getting. So if it is as a result of an accident, then that would be taken care of. Or if you have not served your waiting period, especially for the individual covers, then during that waiting period, or you may not be able to access the cover. Or the other one I would mention is maybe things like or beauty treatment, or if you just want to to look good, you want to go and purchase lotions using your medical cover, then
What
that
if
may
the
not
doctor
be.
has recommended?
Now, that's the key thing here. So if it is prescribed as part of treatment, or because for skin conditions, maybe like eczema, and if something has been prescribed, then that may be covered. And this also applies to things like nutritional supplements. So you cannot walk into a chemist and request for nutritional supplements and expect that the insurance will pay. But if the doctor has recommended, maybe for your child or for yourself, that you need this, then those can be considered for payment. So those are just some of the exclusions that would apply. But the key thing is for members to really look into the policy document, understand what's covered, what's not, because different medical covers have different exclusions. And you'll find that for corporate covers especially, and the international covers, you are able to buy back a lot of these exclusions. But again, our role is to guide you through what's covered and what is not.
So as a broker, do you go through the policy document and make it in brief for the client?
Yes,
that this is what is covered, this is what is excluded.
100%. That I would say is actually one of our main roles, to make sure that whatever the client expects as covered is what is captured in the policy document. So what you purchase is what you get. So we always strive to ensure that there are no hidden clauses, or there will be clauses within the policy document which you may not like, but it is our role to let you know that there's this clause, and it means this and this.
Okay.
Yes.
Okay, and on waiting periods, and maybe Kegode, you can help us answer this. why really waiting period? I mean, if I've purchased a cover, why can't I start using that cover tomorrow?
I think my colleague here had mentioned it. There's an aspect of insurance called moral hazard. That one is not, as an insurer, you do not want a situation where the intention for purchasing that particular cover is with a claim in mind. Insurance is supposed to be for the unforeseen events. So the unforeseen event is that you have procured a medical cover and you suffer from an acute ailment, you should be able to get coverage. Or you get involved in an accident, then you should be able to get coverage. But the situation that would lead to there being exclusions, especially for individual cover, is to avoid a situation where a member goes ahead to purchase a cover and possibly there's a patient in hospital waiting to utilize that cover. So in that case, there would be a waiting period, or there's an already existing medical condition that they are managing. Then the waiting period will work. What we mentioned here is that for groups, for corporate groups and for large groups, then the need for waiting period is usually waived because for large groups, then the risk has been spread across a larger population. But for individuals is where waiting periods is likely to be included. We have seen situations where Minet comes through and negotiates in certain circumstances for what you call continuous transfer.
Yes.
Continuous transfer.
Continuous transfer terms.
Continuous transfer terms, such that if a member was already having an existing cover, we're able to negotiate with the next insurer to be able to take you without having to take you through the waiting periods. But as long as there is no gap within the cover, or where the gap is very well explainable, then Minet is able to step in and negotiate for members.
Okay, interesting. So it's not necessarily a bad thing. It's just moral hazard to ensure that the cover continues without disruptions.
Yes.
Okay. Now, we have situations where I have cover and maybe I have a spouse and they have cover. How can I benefit from both? Does one take precedence over the other? Can both of those covers cover me in case of a claim?
Yes. You see, in this scenario, each of the members you're talking about, say if it's in an employer group or in different employer groups, you have your entitlement to your benefits as an individual. And therefore, if within your cover, your spouse has an entitlement for coverage, and within their cover, you are entitled. So both of you are able to utilize your covers simultaneously in the event of hospitalization. What matters a lot is the card or the insurer that you present on the first call in hospitalization, in a situation where a member has been hospitalized. But should the cover, the primary cover that you go into hospital with, get exhausted, then there's an opportunity to be able to utilize your spouse's cover. We see this a lot in employer groups where sometimes people would be in the same employer group, and you will bring the two covers into play whenever there is a claim that arises. Most of the time, when one cover has been exhausted, then the next cover is utilized to be able to bridge the gap.
Okay.
Yeah.
And for you, Macharia, now, even as we are going towards conclusion, as a broker, you have a good perspective of all the underwriters in the market currently. And I'm very sure when your clients come to you, one of the things they want is for you to recommend who is best. So what are some of the things that you consider before recommending who is best? Is it the one that has been here longer, the one that pays claims, the one that has a fancy name?
Yeah, so we look at very many things before we can recommend a specific underwriter. And the first thing, as we started by saying, is what is the client looking for? So we look at which underwriter meets those requirements. So it's if it is to do with budget, who fits into the client budget? If it is unique benefits that the client wants, who is able to provide those benefits? If it is the provider panel, I want to be able to access this and these service providers for inpatient, for outpatient, which underwriter has that large panel. But over and above that, we also look at the experience we've had with them when it comes to turnaround times, or how soon do you get your medical cards, or how fast are pre-authorizations approved, or how responsive are you, and even things to do with the qualitative aspects of a medical scheme. Do you have a care management practice in place, or all those things? So we do a very thorough review to make sure that we match the client with the best underwriter to carry their risk.
Okay.
Yes.
And for large schemes like yours, do you go for one underwriter? Do you go for several? And what comes into play when you're selecting them?
For large schemes, we mostly provide solutions that involve putting together several players, and mainly insurance companies, underwriters, and we go for the leading underwriters in terms of medical insurance provision. So you would find that the players that we work with have been leaders in their own way. And so they bring on board a lot of experience that is useful to manage such large schemes. They also bring on board their balance sheet to be able to underwrite the risk, in which case for large schemes, the risk is much bigger because of the multiple effect of the coverage over the population. Yeah.
Okay. I think we have discussed so much about private medical insurance.
Yes.
But we are all aware that we have NHIF and soon to have SHIF. Maybe just towards our final comments as brokers, we have seen NHIF in play. We have collaborated, I believe, with them. So what's your take on the coming SHIF from a broker view?
Yeah, so I think SHIF, of course, is meant to lead us towards the universal health coverage for all Kenyans. So that's a good thing. Yeah. In terms of the private medical insurance, I think is to see areas in which these two, the SHIF and the private medical insurance, how they collaborate and how people who have private medical can still benefit from both, or in terms of how do they complement each other. Yes. So, but of course, we wait for October, which is the date when we expect that to be rolled out, and we will be available to guide our clients through how to work around all that. Yes.
Okay. Yeah. So, in case any of the employers, potential clients, underwriters would want to reach out to you for corporate covers, retail cover, individual covers, and for you, maybe large schemes that have never known that they can have an organized scheme for their cover, how do they reach out to you, Macharia?
We are available 100% of the time. You can reach us through email, through phone call. So we are available to have these conversations in depth, yes. And over and above the retail, the corporate, we also have micro covers. We also have international covers for those who want a cover that will take care of them even if they're outside the region of cover, which most local covers will take care of up East Africa. But if you want an Africa cover, worldwide cover, we are able to provide all those as well.
Okay.
Yes.
So would you provide your email address just in case somebody wants to write to you?
So anyone who would like to reach out can reach out at edwin.macharia@minet.co.ke.
Okay. Yes. And Edwin Kegode.
Yeah, I think for managed medical care division is a division that is spread through the country. So you can reach us from any county that you are in. We have representatives in every county, and this information is available on the Minet website. And therefore, if you're in Lamu, you can visit our office in Lamu, and they'll be able to link you up with us at headquarters. Otherwise, if you want to reach me on email, I'm available, and on phone as well. Email is edwin.kegode@minet.co.ke. But feel free to visit our website, because there's a lot of information that you can get from there and be able to access Minet from whichever part of this country that you are in.
Okay.
Yeah.
So, our listeners and viewers, thank you so much for listening to us or for viewing this podcast today. It's our inaugural podcast. I know there's so much that needs to be discussed around medical insurance, and therefore, we'd be encouraging you to send us your ideas, questions, and areas that you'd want us to discuss beyond medical insurance. By the way, Minet does not only broker medical insurance, we broker many other things, and we'll be bringing many other experts into this podcast so that you can get to hear and listen to the range of services and solutions that the company offers. And also, we will be in a position to help you, guide you as brokers on what is right, risk advisory for your clients, risk advisory for yourselves on what you can take up and how you can take up and how to make your journey in the insurance space smooth. So to reach out to us or to share your insights and comments and suggestions on what you want to hear next, write to us at info@minet.co.ke. Our website is also available. Our social media handles, Minet Kenya on Facebook, Twitter, or now it's X, Facebook, X, Instagram, and LinkedIn. And you can reach out to us in any of those platforms, including our website and our email address. And we'd be able to bring more experts into this session, discuss more issues. I know even for medical insurance, this is not exhaustive.
No.
There's so much that people want to learn about the medical covers and why medical covers. So it's been a pleasure, and I look forward to seeing you next time and for you to listen to us next time. As always, this is Bima Beamer. Thank you so much.